Welcome to The Explainer. Today we're taking a massive, deep dive into the chaotic and rapid evolution of artificial intelligence as we sit here in July 2026. And look, this isn't just about a few scattered tech updates. We're looking at an industry at an absolute critical inflection point. You're going to see exactly how astronomical software demand, unprecedented financial investment, and mounting societal friction are all crashing together right now to shape the future of technology.
Here is our agenda for today. First, demand breaks the infrastructure. Second, the multi-billion-dollar fix. Third, the humanoid robotics Cold War. And finally, society pushes back. Let's dive right in.
Section 1. Demand breaks the infrastructure, the reality of unprecedented growth.
1 billion. Just wrap your head around that number for a second. Internal data shows ChatGPT is approaching 1 billion weekly active users, and they actually officially crossed the monthly billion mark back in June. It is now, without a doubt, the fastest consumer app in human history to reach that milestone. I mean, they are leaving titans like TikTok, Instagram, and Google Maps completely in the dust. The adoption rate is simply staggering.
But you know what's really crazy? On the exact same day that massive milestone dropped, users across the globe trying to access Anthropic's Claude were hit with this: 529 overloaded. Claude suffered a massive global outage across all of its API-connected tools. And here's the kicker. This marked its fourth significant disruption in July alone.
So this juxtaposition is literally the exact tension tearing through the industry right now. On one hand, you have the pure euphoria of record-breaking hypergrowth. But on the other hand, you've got the grim reality of technical limits. The sheer volume of AI demand is just rapidly outpacing platform capacity across the board. The software might be ready to go, but the physical hardware is actively buckling under the weight of the world's queries.
Section 2. The multi-billion-dollar fix. Big Tech's massive response.
Because of that infrastructure strain we just talked about, the sheer scale of capital being deployed right now to fix it is mind-blowing. For 2026, Amazon is guiding roughly $200 billion in capital expenditures, and Microsoft is nearing $190 billion. Together, that is nearly $400 billion being poured into AI infrastructure in a single year. And Microsoft isn't even stopping there. They just projected they'll bump their spending even higher to between $255 and $260 billion for fiscal year 2027. We are watching a monumental, historic build-out.
Now, you're probably asking, is all that spending actually paying off? Honestly, yes, it is. Microsoft just reported a blowout fourth quarter, with their Azure Cloud division crossing $100 billion in full-year revenue for the very first time. Growing by an incredible 43%, this proves that while the AI model layers are struggling with uptime, the hyperscaler layer, the cloud infrastructure itself, is successfully monetizing this massive boom.
But here's the catch. Wall Street is pretty deeply divided on all this. While Microsoft Azure prints massive revenue, the semiconductor sector is sweating. The Philadelphia Semiconductor Index just posted its fourth consecutive loss, which is its longest losing streak of the year. Why? Well, investors are mounting serious fears over AI infrastructure debt. Those massive capital expenditures are making a lot of folks incredibly anxious about the long-term profitability of the chipmakers who are supplying this whole boom.
Section 3. The humanoid robotics Cold War. The AI battle moves to the physical world.
Okay, let's pivot out of the cloud and into the physical realm. When it comes to humanoid robots, China currently controls a staggering 85% of the global market share, leaving the entire rest of the world fighting for just 15%. That is a massive imbalance, and it's exactly what's setting the stage for some severe international trade friction.
Just look at how fast this is escalating. In July, the USFC officially banned the import of new Chinese humanoid robots and connected power inverters, and they cited supply chain vulnerabilities and cybersecurity risks. Then, by August, Chinese automaker BYD answered back, unveiling its very first humanoid robot with plans to deploy units straight to their car dealerships. And all of this culminates as a major, high-stakes flashpoint heading into September's planned summit between President Xi and President Trump. AI hardware and geopolitics are now completely intertwined.
Meanwhile, the US is pushing hard to close that market share gap. Just recently, US-based Agility Robotics announced it's going public via a SPAC at a massive $2.5 billion valuation. They already have over $300 million in multi-year orders for their robots lined up. So what this tells us is that both nations are in an absolute sprint to scale their physical AI capabilities. The race is on, and it's heavily funded on both sides.
Section 4.
Society pushes back. The human friction in the AI boom. So, all this unchecked expansion, it's hitting some very real human roadblocks. And this pushback isn't localized. It's happening simultaneously across multiple distinct industries. We've got over 1,100 AI workers signing an open letter about safety. We have writers on Substack organizing protests against the platform's proposed AI detection features. They're arguing the tools are notoriously inaccurate and actually threaten their livelihoods. And at the state level, XAI is currently suing the state of Minnesota. Let's look a bit closer at these disputes.
Right inside Silicon Valley itself, a massive fault line is widening. The AI safety community is urgently asking to pace development, really wanting to focus on guardrails and long-term security. But they are clashing directly with the venture-backed commercial imperative, which absolutely demands rapid deployment, massive hiring, and shipping products as fast as possible to satisfy those billion users we discussed earlier. It's a fundamental clash of priorities within the very labs building our future.
And we're seeing this friction play out in the courts, too. Here are the facts of a major upcoming legal battle. The state of Minnesota passed a first-in-the-nation law banning AI nudification tools. It takes effect on August 1st and carries massive fines of $500,000 per image. In response to this, XAI filed a federal lawsuit to block the law. They argue it acts as an unconstitutional content-based speech restriction that forces them to restrict image editing features in their Grok AI. Now, regardless of where you stand on the legal arguments here, this August 1st deadline will absolutely be a landmark moment for how states can or cannot regulate generative AI platforms.
Which brings us to a vital question we all need to be asking right now. Can the infrastructure support the ambition? Today in this explainer, we've traced the incredible tension defining July 2026. We've got breakneck software demand pushing user counts to 1 billion. We've got physical hardware limits causing global outages and triggering $400 billion in hyperscaler spending. And on top of all that, we have massive societal and geopolitical guardrails forming, from the FCC robot bans to state-level lawsuits and creator protests. The AI industry is moving faster than anything we've ever seen, but the physical world and the humans living in it are demanding a say in exactly how it scales. Thanks so much for joining me for this deep dive. See you next time.